Analysis of commodity currencies from a FutureTrend channel. Here the situation is like in the crosses, yen crosses or euro crosses. Depends a lot on the situation in the financial markets, risk appetite, situation, environment. And as you know, for example, the Australia dollar is under direct selling pressure at the moment because of the United States-China tensions, trade tensions. In case of deepening such kind of relations, of course, the Australian dollar should have another downside acceleration to the downside. From the point of view of technical picture, the Australian is closer and closer to its longer term uptrend line located at 76.10, and we will try to accumulate another long position around this level, hoping the situation could change. But of course, from a longer term fundamental picture, here it's not everything not so well, so good for the Aussie. As you know, the continuous trade tensions between the United States and China should have a much bigger pronounced negative effect on the Australian dollar. And from the point of view of interest rate differentials, also the United States dollar is much more attractive at the moment. And today's United States economic numbers, in case of bigger upsides surprise, should have another positive effect on the United States dollar. As regards the Kiwi dollar, the situation here probably is not so bad, but I would like to note one interesting fact, that despite of all the positiveness we have now regarding the United States currency, for example, higher tariffs imposing by the United States administration from the point of view of nearest future should have an effect, a positive effect of United States inflation. That will mean that the United States Central Bank should be much more aggressive in its pace of tightening. And another reason, higher situation with employment, higher average hourly earnings should also produce a kind of positive effect on the United States currency. Anyway, we see that, for example, the Kiwi dollar is very, very resilient to all of these positive news regarding the United States dollar. That means that in case of bad numbers, in case of negative surprise from Jerome Powell, in case of, for example, cooling of current trade tensions between the United States and its major trading partners, that will mean that the new Kiwi dollar, as well as some other commodity block of currencies, will have a very very good potential to rebound. As you can see, for example, on the Canadian dollar, which is the dollar Canada are under the selling pressure now because, as you know, the NAFTA negotiations is start to proceed rather smoothly than before. And also we knew that Canadian economic numbers, were quietly good for the last time, especially inflation numbers. Today, by the way, we have a Canadian employment report, and we should pay attention also to these numbers. And all in all, we still suggest, from a fundamental point of view or from technical point of view, the dollar Canada should proceed further to the downside. As regards the dollar ruble, the situation here is a little bit tricky because of the Russian ruble. As you know, the Central Bank of Russia policy is still to reduce its benchmark interest rate. From that point of view, the Russian ruble should be considered from a weaker side. Anyway, also we have to pay your attention on the future prices for energy products, as well as the current problems of Russian Federation with Western diplomatic wars and other sanctions. All in all, the Russian ruble should have much kind of bumpy road ahead. Anyway, it's looking quite stable at the moment. As you know from a longer term picture of view, the pair still remain inside of the range between 55 50 at, let's say so, 60 and a half, 61. While we are inside of this range, we continue to expect the ruble will remain range traded. See you later and bye bye for now.